Let's talk about down payment. How much is required for a down payment these days?
So there's a lot of misinformation, if you will, out there about this Oleg. It's basically, for a conventional loan, you can do 3% down if you're a first-time buyer with low to moderate income, 5% down, just about anybody qualifies for 5% down on a conventional loan, which a conventional loan goes up to about $650,000. I think it's $647,200 to be exact. So you can get a quite a substantial loan for as little as 5% down on a standard conforming conventional loan. FHA requires 3.5% of the purchase price as your down payment. USDA is 100% financing, as is VA financing. Neither of them has any down payment requirements. There are programs available throughout the state of Texas for down payment assistance where you can get 3, 4, 5%. This can be either in the form of a grant, which you never have to repay, or it can be in the form of a zero interest, zero payment loan that is eventually forgiven. And the different entities that provide this type of assistance have different requirements, but they all have income limits and they all require at least a credit score of 620, some are up to 640 now. So you'd want to make sure that your credit's at least okay to be eligible for any type of down payment assistance. Once you factor in the down payment, the other thing you have to consider as far as money that you need when you buy a house is closing costs. It's not really a flat percentage rate because most of the closing costs are about the same regardless of the purchase price. But on the average, it's about $6,000 to $7,000. That includes all of the bank's fees, the title company fees, your first year of insurance, which is required to be paid at closing, as well as 3 months of taxes and insurance that go to set up your escrow account so that you don't have to pay the taxes and insurance separately.
Just to confirm, the closing costs are separate from down payment, correct?
Correct. So you have down payment and then you also have closing costs. It is allowed from an underwriting standpoint to negotiate the contract for the seller to pay closing costs for you, but it's not very common to get that approved in this market. Most sellers know they don't have to pay your closing costs in order to get a buyer on their loan or on their property. If you put 20% or more down, it's not a requirement, but if you do that, then you don't have to carry private mortgage insurance.
What is the private mortgage insurance?
Private mortgage insurance is basically an insurance policy that protects the bank in case you default on the loan. It does nothing to protect you, the consumer. So if you do have 20% down, you can avoid that private mortgage insurance. But know that the private mortgage insurance isn't terribly expensive, and as of this moment, it's still tax deductible, much like your mortgage interest. So it's better to have a low down payment and buy a house than it is to wait to have 20% down payment. More than likely, if you buy a house today, in a year or two, or certainly within 5, the property value is likely to inflate enough to where you no longer have to continue carrying that private mortgage insurance.
Thank you for clarifying that. What about a 0% down payment? Is it even possible?
It is possible with VA financing, USDA financing, or with down payment assistance programs. And so again, you'd need at least a 620 credit score to be eligible for down payment assistance, and you would need to be considered low to moderate income. I think the household income limit as of today for most down payment assistance programs is in the range of about $80,000 for the household.
That's good to know. Thank you for answering that. Hello and welcome to my channel. I'm Oleg Sedletsky, your Dallas area realtor. This video is part of my conversation with local loan originator Wrayanne Williams. You can find the link to the full video in the description below.